Welcome to the Child Care Genius Podcast, the world's leading authority on child care marketing, mindset, expansion, and profitability. Our host, Brian Duprey, is the world's most sought-after child care coach, having helped tens of thousands of child care owners from around the globe take their business to the next level. Let's welcome to the Child Care Genius Podcast, our host, Brian Duprey.
Hello, welcome to the Child Care Genius Podcast. I'm your host, Brian Duprey. So happy to be with you here today. Carol sends her regards. Today, we're going to talk a little bit about finances again. This is week 3 in a 4-part series. In July, we're handling finance on our Friday podcast. So today, we're going to talk a little bit about tax strategy. And before we get started, as always, I'd like to talk to you about our next upcoming conference, our Financial Leverage Conference, which is taking place in the beautiful, sunny Riviera Maya, Mexico, September 29th to October 2nd. Oh, amazing conference. The Financial Leverage Conference that we do is just awesome. We're done at 1 o'clock every day by the pool, by the beach. At that time, you have the rest of the day all to yourself. It's only a couple hours in a classroom each morning, and every topic is going to be financial in nature. Teach you how to expand your enrollment, increase profitability. We're going to talk about marketing, leadership, all kinds of different topics that increase the profitability in your business with the ultimate goal of building you an 8-figure or $10+ million net worth. Well, a big part of that is going to be tax strategy, which we're going to talk about today. So if you want to buy tickets to the conference, Carol and I would love to see you there. We mix and mingle. We don't hide behind a curtain at our conferences. You'll see us walking around. You'll see us in the pool, at the bar, in restaurants. We were here to serve you. And we will be hanging out, get to know you, and can't wait to do that as well. And my email, if you have any questions about the conference, email me personally, Brian, B-R-I-A-N at childcaregenius.com. I return all emails personally. I don't have anybody handling my emails. I handle things myself. Happy to talk to you about the conference. And so go to childcaregenius.com and go under the conference tab. And there you will find the Leverage Financial Conference, and you'll be able to get tickets today. They're going fast. There's only a few left, so please get those today. We'd love to have you at the conference. So let's talk a little bit today about tax strategy. A tax strategy starts with setting your business up properly as a proper with a proper tax structure that is best for your state. I'm not going to tell you how to set it up. I'm going to tell you, you just need to have a structure that's very state specific that works for you. Be sure to talk to your accountant and make sure your accountant is a CPA, which is a certified public accountant. That means they have a certain level of training that's above the standard accountant, and you're going to want that level for your childcare business, especially if you're doing revenues of $200,000 or $300,000 a year. You're going to want to start getting up there and have a CPA handle all that. So I'd highly recommend that. So what you're going to meet with them and say, what's the best tax structure for me with the IRS? So I pay the least amount of taxes allowed by law. And for most people, it's probably going to be an LLC and an LLC that's taxed as an S corporation. We have a few clients that have C corporations. We've had clients that have had sole proprietorships. We've had a few partnerships. But the vast overall majority of the clients that we coach have either LLCs or S corporations or LLCs taxed as S corporations. So a limited liability company or LLC can be taxed several different ways. You got to talk to your CPA on that. But an S corp is only taxed as an S corp. A C corp is only taxed like a C corp. But an LLC can be taxed in multiple different ways. So talk to your CPA on that. It gets pretty technical, and you got to do it right. If you don't do it right, it's going to cost you a whole lot more in taxes. C corps are double taxed. C corps are taxed as a company, then you're taxed individual on the profits. So you want to make sure you have that right strategy. In some cases, it's good. Some are bad. For me, I have an S corporation as my childcare business, but I have many other businesses that are LLCs, taxed as S corporations, or just LLCs, taxed as partnerships. Depends on the business, depends on the holding. So again, get with a CPA on your tax structure. The next thing you want to do on tax strategy is to make sure you have a very good accounting policy to keep track of your income and expenses. Make sure that you are reimbursing yourself properly, accounting for every expense, making sure that you're reimbursing yourself for mileage driven and things like that. If you buy personal things for the daycare, you are using corporate credit card and getting a tax deduction out of it and not mixing personal expenses with that. On the flip side, make sure that your daycare is not paying your home mortgage. Make sure that your daycare is not mixing personal expenses because that is tax evasion. And you make sure that you do, they are actual, real corporate deductions. Don't buy food for your home from your daycare funds. That is illegal because you are getting a tax deduction, not paying tax on that money, and you are doing it's tax evasion, and you could get in trouble and go to jail for that, actually. So just don't break the law. Everybody should pay their fair share of taxes. I agree with that. Just don't pay more than you have to. That's the strategy I'm trying to give you today is don't pay more than you have to. So making sure you're keeping track of records is a really good way to make sure you're not overpaying. Another way is to make sure that if you are set up an S corporation, you're paying yourself the right amount of money. You may be paying yourself too much or too little. So talk to your CPA about the best strategy if you're an S corporation or an LLC taxed as an S corporation, and make sure you're paying yourself a reasonable salary, but no more, no less, because you might be overpaying or underpaying on taxes with regard to that, because you could do what they call dividends and take profits, distributions out of your business, which are not Social Security taxable, which will save you 15% of taxes. So everything, again, is to try to save some money at the end of the year on your taxes. Another thing is to make sure that you have a CPA do your taxes every year. Do them on time, try to get them done, and make sure that you pay enough estimated taxes throughout the year that you don't get penalized. So make sure you ask your CPA each quarter, do I need to pay in quarterly taxes so I don't get penalized interest at the end of the year with interest and penalties? I have a lot of clients who've been penalized over the years because they wait till April 15th of the following year to pay the tax man, only to write $100,000 or $200,000 check with thousands of dollars worth of interest and penalties in there for not paying their quarterlies throughout the year. So that's very important to make sure that you pay the right amount, but also pay the right time of the year as well. So there's a whole bunch of tax strategy. The last one is I'm going to be hitting next week pretty hard is diversification. And one of the best tax strategies you can have is owning property. Your child care center owning property, but not in the child care center's name. Never buy property in an S corp ever. So you never want an S corp owning property because it creates a whole mess when you try to sell it to your kids, and it's going to create a huge tax liability. So don't do that. We've had clients do that before, so don't do that. But you want to make sure you meet with your accountant to know when how to set up properties. But owning property is a great tax shelter. You get good depreciation, which offsets income, and you'll pay a lot less taxes owning daycare buildings than just renting them. So that's the gist on tax strategy. Again, trust professionals, know your finances, proper record keeping, proper corporate structure, proper compensation. You do all that, and you're going to pay out. You're going to watch your effective tax rate drive down. Your tax rates will be much lower. There's a good chance that your tax rate as an owner will be lower than your employees who make a whole lot less than you because you employ the strategies that business owners and real estate people use to drive down their effective tax rate. The worst thing you could be in America is a W-2 employee. You're going to pay the highest amount of taxes. Owning your own business, and especially owning real estate, drives your effective tax rate down to very low, much lower numbers because you're investing in America. And you get rewarded for investing in America by owning a business, employing other people, which they pay taxes, which helps the whole system, and by owning property, which helps everybody. So this concludes this episode of the Child Care Genius podcast. I hope you've learned something today. Again, we'd love to see you at our conference in the fall, the Child Care Genius Leverage Conference. Please buy a ticket. Come meet Carol and I and spend some time with us. Next week, I'll be back for the final week in the financial series, talking a little bit about diversification of income and why you want to buy real estate. We'll see you next week, and have a good week, everybody. Bye-bye.
Thank you for listening to the Child Care Genius Podcast. If you enjoyed the show, please do us a favor and hit the subscribe button so you don't miss a future episode. Don't forget to visit our website at childcaregenius.com to see a list of services we offer to help grow your child care business. Until next time, thank you for being a part of the Child Care Genius community.